Alrighty, traders. Alrighty. Let's get into today's live stream. If you guys are watching the replay, welcome. Firstly, I'm going to be talking about not short-term moves, particularly the big long-term wealth cycles. Long-term cycles that are at play in these markets here. And how we go here? All right, let's go 50. There we go. 50. 5 years to go. So I want to be touching on more longer term stuff that people can look at here, where pendulum swing is going, long-term stuff in the markets. So we can take advantage of big moves instead of looking for shorter term trades. Big long-term wealth cycles. There is so much money to be made from these markets. So much money. If only we just get ready for it. And we see what's going on. Long-term wealth cycles. Let me bring this up to here. Oh, there's so much movement in there. So I first want to start off with this one here. Let me go to the good old disclaimer. Guys, I have no idea what's going to come up. I can only look at the probabilities, and I have many losing trades myself as well too. So no matter what I say, there's always risk to any particular investment or trade you do. You know that, right? That's not from a risk disclaimer point of view, but it's just being smart, right? The number one question you need to ask yourself every time you get involved with any position or any investment is, what is my risk to this investment? What is my risk? What's the downside? What is the downside? Because there's always a downside. What's the risk to the trade? What's the risk to the investment? And if you can honestly answer that, you are now doing the number one thing that professional traders do, protecting your account. And that's what it's all about from there. That's what it's all about. So traders, if you do, I'm creating a bit of a flash sale right now. So if you go to johnsflashsale.com, I'm actually giving away 5 of my top trading systems for $4. So if you need some help from there, then just go get that. Or if you'd like to get more coaching, then that's at getjohns, JOHNS, getjohnshub.com. There's more information over there about that, testimonials and all that sort of stuff. So you can go check that out if you want to get access to the elite group. So one of the things that Peter, my man, hate weekends because the market is closed. Yeah, but Peter, you know what though? One of the good things about when the market's closed is this. It gives us time, and I'll just bring back. It gives us time, right, to not, because if you think about it, when the market's open and we're looking for positions and we're trading, there's a lot of emotion with that, right? Our minds are like firing at all cylinders. Especially when we're doing some shorter term stuff in the markets. And so when that's happening, our emotions are high, things are happening, there's lots going on in our mind. What's going on here? What's happening there? Get into the trade, emotions, the stop losses, profits, and this trade here and that trade there. And there's a lot that can be going on in our minds when the market's moving, right? The good thing about when the market is closed is that all settles down, right? There's no heightened emotion because the market's closed. So the emotion comes down. The noise in your mind slowly comes down as well too, if you're not having a lot of things going on in the background. And then within that state, we can start to see things more clearly, more like what's really going on in the markets right now before it opens, what's really happening in the markets. And then also we can look at logically about our own trading, like what's really going on in our own trading. Are we making good decisions? What are the lessons from our trading? And then we can start to look at the last sort of maybe 5-10 years of market history, and we can start to see logically where have I missed something, opportunities, and so on and so forth. So all the lessons for me, the big lessons, come from where I'm at right now. For me, it's 6 o'clock in the morning right now. I got up at 5 o'clock this morning, and now I'm looking at the markets. That's the reason I'm doing this live stream, by the way. I'm going to be looking at the markets myself this morning for a few hours. And it's within this state, because the market's not open, apart from obviously crypto market, I'm not looking for trades today. I'm just getting a good barometer on what's going on right now and where's the next, what's happening here. And when you start to look at that, that's when the breakthroughs and distinctions and ideas and growth that comes from. That's what I found. And then when the market opens up, we can come to it with a bit more fresher eyes from there. But if the market, and this is where intraday trading, the intraday trading side of things, is always the hardest form of trading, right? Because if you think about it, you're watching a 1-minute chart or a 2-minute chart or a 5-minute chart, and it's moving constantly, especially the foreign exchange markets, right? And if you're watching the foreign exchange markets or the futures markets, it's constantly moving. That is so much brain power. So much brain power. Looking at the charts, drawing your trend lines, looking at the indicators, checking the news, doing this, doing that, looking at YouTube. It's like, woo, our brains, right? And it's like so much for our brains. And then that's what causes mental fatigue. And you guys that have done that before or are doing that, you know exactly what I talk about. You just get so tired after a few hours of looking at the charts because your brain is absolutely on fire. Now, the worst thing that I've done in the past when trading that way is push through that. And then that's when I make some really stupid mistakes. I just get into a trade because I'm bored. I'd load up on big risk, and it was always a recipe for disaster. That's why I don't do that anymore. I don't need to. I don't day trade anymore because I'm not looking for small profits. I'm looking for big profits. I'm looking for the big swings that could last a couple of weeks to a couple of months. And now I'm looking for trades that could last 6 to 12 months and have really big profits on one trade. And for me, I'm trying to, in a whole year, if I look at a whole year, I'm trying to have these really big profits. And that's the way that I'm doing my trading now. So I actually don't mind when the market's closed myself, because it just gives me that time just to reflect, see what's going on in the markets, and look at things like this. Look at this chart. And just gives me ideas to look at this chart like here right now. So one of the things that I've always learned, I've started slowly learning over the last probably, I'd have to say 5+ years now. More so the last 5 years, over the last 20 years of trading career, is the art of looking at the big picture. There's always these big cycles at play in the economy, in the markets. The thing that I always made a mistake, though, is that I was always looking at the markets from a shorter point of view. And from that shorter point of view, I always found that I was always missing the big picture here. And so if I look at the Dow Jones, this is the Dow Jones here for the last 3 months. We're still in a very big upward trend, by the way. So if you guys, I still don't get it. Well, the top's in today. No, the top. It's like in November. Oh, the top was in. No. Okay. What about in December? No. Okay. What about in January? Top's in. Okay. Well, the top's in right now. That's right. The top. And just keeps going up. Oh. Um, I laugh at that concept there, or that situation of people trying to call tops in the markets. But that's the hardest form of trading. Reversal patterns. Think about it. Heads and shoulders, divergences, double tops. Um, looking at stochastics, RSIs, and stuff like that, MACDs, and the divergences on there, and the nature of a reversal pattern against the trend. You do know most of the time those things are not going to work out, due to the nature of a trend will continue most of the time, and then sometimes it'll end. And if you just look at, say, for example, this chart here, you could start to look at potential head and shoulders here, potential double tops all the way up. And it's crazy. So the nature of these markets, once again, so this is, I'm always looking obviously at the short term, to see what's happening in the short term, but there's big swings at play. One thing I've learned, and for you guys have been around for a while right now, one of the things that I've learned around these markets is there's always these big cycles at play. And so if I bring up again a log chart here, this is a log chart here on the Dow Jones. Now, how did I see that the energy sector, XLE, and XOM were likely we're going to be the market to make that next big move, or to make a move? And it's simply because I was looking at the big picture. The big picture was guiding me down what's coming up real soon. And that's where, if I bring up the actual XLE chart, you'll be able to see it was from the monthly big picture chart. This one right here, which gave me an alert to saying we could be getting ready for a big breakout on XLE soon. Now, what alerted me to that? Keep it really simple, is that this is a monthly chart here. You can see there's nothing on here apart from one moving average. And what that alerted me to for the big move was this sideways period through here. When a market does nothing for 3 years, that's getting ready for a breakout soon. And when it breaks out, it's probably starting a new trend. This is exactly what gold did. Like, look at here. It's the same pattern. Look at this here. This is gold. See how gold's making this here? Basically, gold's doing the same. Gold was doing the same thing XLE is doing right now. Look at this here. It's the same pattern, right? But this is a monthly chart. So the thing with the idea of this, it's not about what's going to happen tomorrow, which, if you are trading that way, your time in the market is going to be very limited. But if we can see the forest from the trees, where the overall movement's going to go, then we can get ready for that, and then not be so jarred by short-term swings. Oh my goodness, the market went down today 4%. Oh, you're so jarred by that short-term movement, you can't see the big picture about what's going on, and then therefore you're pushed around, swayed by all this stuff. But for me, I'm just looking at the repetitive patterns that work again and again and again, most of the time, that have the potential of producing a big move. What is that for me? For me, the same thing here with what? This is the GLD chart. We had a big move up through here. This is a couple of year period through here on the GLD. And then we had nothing for 3 years. This is a 3-year period here of GLD doing nothing. This is the time here where what? Where if you were talking about gold back then, you're an idiot. Why are you talking about gold for? Gold's nothing. Gold's hopeless. You should be on Bitcoin. Yada, 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 yada. Right. And then suddenly the pendulum swings. And then suddenly, guess what ended up happening? Right. Then we started to get the breakout. And now here's the breakout here, right? What does that mean? After 3 years of doing nothing, we're likely to get a nice, good, strong bull market. Now, we never know exactly how high or how fast, but in this case, gold started to made us move up from there. Now, again, That there, what is that going on there? What is that all about? What's that line there? Oh, there we go, right? And then as you can see, right, again, this is a monthly chart, right? Each of these are the monthly bars, but it gives you a guidance of where things were going and what's happening here. But this big move here in gold in the last 2 years came off the back of what? The same thing. It's the same patterns, the same. So I started to realize early on that whenever we had these markets not doing anything, just sideways, channeling, volatile, nothing going on for, in this case, 3 years, whenever we broke out, that was the start of a big move. Now, a big move is what? In the reality of things, what is a big move? The reality of a big move is it's going to go up for a couple of weeks to a month, and then it's going to have a pullback, right? And then that might last a week, that might last a couple of months. And then it's going to go for another move. That's what a bull market is, right? This here looks big because it's a monthly chart. But this here is two, and every single one of these is a monthly bar, and it's 2 years worth of data. So again, right, if we want to capture big moves, one, get away from a 1 minute chart. You're going to destroy yourself. Because two, you're missing out on these really big moves where you could just be in one position and let it go for a couple of years and have a really big profit out of one trade. Right? And then even like, look at this here. This was Goldman Sachs. Why has Goldman Sachs had such a big move through here? It's all the same thing, right? Look at this here. I've got some targets here, but anyway, I'll show you this here. The same thing, right? Look at Goldman Sachs. Now, I'm just using stocks here, but when the same pattern appears, you're like, oh, I know what's likely to come now. That's all as simple as that. I don't have to look at the fundamentals or why is this going to happen. For some reason, whenever I see this pattern on the chart, and that is we have a strong move up first, just like gold did. And then we go through what? And then we go through a period of what? This one here is, again, look at this here. From there to there is almost 3 years. Then what happened? We broke out, didn't we? And what did that start? That started after this strong move up, 3 years of doing nothing. It started Goldman Sachs to the upside. So I'm bringing up an individual stock because I'm trying to show you, even on individual stocks, we can look for this pattern on the monthly chart. I was like, oh, if we're looking for good investments, right? Which I know some of you are, right? You're not all day traders. I know some of you are day traders, but you'll soon realize that that's the worst form of trading out there and the hardest form of trading out there. And you're probably going to lose all your money. Speaking from my experiences from 20 years of trading the markets. Now, the reason why I like this here, right, because we can start to, if we've got if you guys that have got, especially millions of dollars of an investment account, and the same for me, like I'm always looking for how do I put percentages into these opportunities that are 5% investment into, say, Goldman Sachs back here, right? And then you have a big move up through there. That 5% gives you an almost 10% growth on your account from a 5% position. And that's a 10% growth on your account. Now, again, you guys know, right? That's actually a pretty nice return on your account from one trade, just from fun. Like that's the sort of thing I'm looking for, right? Where you can put these positions on that's likely to make these big moves. AXP is another one that is on top of my mind. Look at AXP. It's the same thing. I'm using things here, but look at this here. Notice how we went sideways, but we had this big strong move up first. So strong move up. It's what's called the L-shaped trading pattern. It's the most amazing pattern that I've seen out there on the marketplace. It works on daily charts, weekly charts, and monthly charts. It's amazing. The L-shaped trading pattern simply means the market goes up through here. So the L-shaped trading pattern is when in this case, the upside down L-shaped trading pattern. The market has a big move from there to there. So that's a real big move, right? And then guess what? We overall do what? We don't trend, do we? If we look at this, see how I've just drawn this in the middle? That's an overall up. What is this happening here? it's an overall what? Just sideways, right? So if I just draw that from there to there, just to make it a bit more nicer. See that through there? The reason why I've drawn it line through there in the middle, because it's just overall sideways. But see how it's like an overall, what's called an L-shaped trading pattern. That's my number one trading pattern that I look for, even on a daily chart, if I'm looking for a trade that could last a couple of weeks to maybe a bit longer, from a bit more of a shorter term perspective. Some of you guys that are trading the 1 minute chart, you're like, a couple of weeks is a short term move. I get it. And then look at this here. Boom, 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 boom. Right, and then we've had this move up from here. So that's the purpose of me saying this here is I've started to notice there's big major swings at play, big major cycles at play, and the daily charts especially can give you these short-term little fake outs, short-term volatility that can just completely mess with your brain and think something which is just not true. And so therefore, if you look at this pattern here that I'm talking about, let me go back to XLE. Now do you see why I was so bullish on XLE? Because it's the same thing, right? Look what's happened with XLE. What's it? It's my L-shaped trading pattern. Here we go, up through there. Or this one is the upside down L-shaped trading pattern. But bullish, bearish, same thing, right? And then look what happens. Same with gold, same with Goldman Sachs. Like it's the pattern. It doesn't matter what it forms on. Whenever we get that, we typically get a good move from that there. Now, they're looking at monthly charts and trying to see where's that next big move, right? The title of this live stream today is looking for those next big moves and keeping it really simple. We don't need to try to come up with a complicated system of looking at fundamentals and where's the PE ratios and what's happening with inflation and where's the interest rates and all that sort of stuff. It actually doesn't have to be that complicated. We think it does, but I'm just showing you a simple pattern now that even for investment purposes, for you guys that got larger accounts, millions and millions of dollars, that's the same for me. It's like I'm looking for always these opportunities, right? And when you start to do that and you start to take even, 5% of your account and put it on one of these trades and another 5%, you start to realize that over a period of years, you start to get some really good growth on your account. A good 10, 20, 30% of your account starts to grow from only looking at doing 5% of your account position here, position there, and so on and so forth. And that's how you start to get what? You start to generate big moves and you start to get what did I call this session today? Get ready for the next big moves, 100-year super cycle, generating big returns and wealth. Yeah, so that's the idea, right? We're looking to generate big returns here. And so this also goes down to generating big returns in the markets. But also it goes down to what's really going on in the stock market right now. And again, if I go back to what's happening on the daily charts, this is the daily chart candlestick chart. Oh, that's XLE now. Look at it break out. And I look at the S&P 500 or even the NASDAQ, you might be thinking it's rolling over, right? Oh my goodness, it's rolling over. But one of the best things to do one of my job as a coach is to keep you in control of your emotions. So you're not letting those, because that's when you start to get too fearful or too greedy, those heightened states causes bad decisions all the time. So as you can see with me, right, I'm always neutral around these markets, like what's really going on. And from a short-term level, candlestick basis, cool. But I can't really see what's going on here. And this is when I can start to look at the weekly charts. And then I can start to look at even much, much, much larger picture to see what's going on even through here. And that's like even, once again, looking at, say, for example, even on the NASDAQ, this month, these big long-term monthly charts. And the interesting thing is if I bring this chart up to you, and even from the S&P 500 perspective, look at this here. This here is the bull market we've been in since 2008. Notice every time we've had these bit of scares, they've been buying opportunities. And someone's trying to call top right now on a big 80% collapse right now or 50% collapse right now. I'm like, no, we're not there yet. We're just simply not there yet. So, and this is where like I've looked at, let me see if I'll bring this up to here for you guys, because I've been doing some post on my post. And I'll show you this here. So this is my post page here, right? My post page. And I've been doing lots of posts here. So if I bring this up to here, let me see if I can zoom in. I can, yes. All right, cool. Right, so look at this one here, right? This last one here right? This one here is a Dow Jones monthly chart. Dow Jones 100%, 100-year super cycle. Many more years left in this big bull market. We could hit the Trump 100 in the next 5 years. And that sounds crazy right now, right? Because why? We're so focused on the now. But look what we're still involved with right now. The music hasn't stopped. We're still printing money. They're still stimulating the bubble. It's still moving forward. Why would you think the music hasn't stopped? Not yet anyway. Oh, but John, it's coming towards the end. Well, when is that coming? Is it 5 years from now? My best estimate is we still have a lot more to go. And so, as you can see here, by looking at, there's massive cycles of play here. And I say, look at this here, roughly 10 plus years. I say 10 plus years because I don't know, there's not exact, right? It might be 13, 14 years. And then but when we break, we go for roughly a 16-year overall extension before we go through these, what's called lost decades. Peter, mate, right now I like the Russell. Yeah, Peter, mate, I'm not sure if you're watching my YouTube videos back when the Russell broke out. I think it was in November last year. When did it break out last year? Yeah, in October, and then we had that pullback in November. And I started doing YouTube videos saying that this is probably going to be the start of a nice leg out, finally breaking out of Russell. So I 100% agree with you. King Russell, baby, if you've heard that. King Russell, baby. Russell's coming to town. So, and if we have a look at this here, this is the Dow Jones chart. This here is what? This here is the S&P 500 monthly chart. Ever since 2008, we have been in a massive bull run. Yes, we get 10 to 20% corrections along the way, but it's only short-lived. And people think that this is the time for a big crash to come right now. I don't know, why do people make life hard for themselves? I'm not sure why. Maybe what? I do know why. Because that's the nature of the news is always going to be negative. That's what's going to get your attention. You know that, right? They're not going to come out and talk about all the good things in life. Because they're boring. Give me something exciting. Give me some drama, right? Give me drama. So therefore what? They're going to talk about, oh, this bad thing, right? So you're going to be, you think fundamentally that especially when you watch on YouTube, right? What's going to get your attention? Is it like, help you make money, or big danger coming up right now, or something like that? Like, you know what I'm talking about, right? We're so drawn to, or I'm not me, but, well, I'm not now, should I say, because I'm just like, oh, whatever. There's so much good in life. And and then we're so conditioned. If we spend hours and hours and hours going down this rabbit hole of the economy and the confidence and the sentiment and the debt bubbles and, China's dumping the bonds and, and the interest rates is now getting too high. And oh my goodness, Ray Dalio says the end's coming. And And then you go down that, and then you say, oh, that's it, the top's in right now. And then it never does, right? It never does. Because look at this here. And I say, why? You've been 100% wrong for a big crash, 50% crash. That's what I call about a big crash, for 15 years. Now, yes, we're going to get a short-term correction. I'm trying to show you here from a big picture perspective. This is a S&P 500 monthly chart. Yes, we get our corrections here of 10, 15, sometimes even 20%, but it doesn't turn into a full-blown bull market. And it hasn't done. In fact, they have been the best buying opportunities in the last 15 years, not tops. So it's probably going to continue until it doesn't. And that's right. Someone said until it doesn't. You're right. So therefore, if it's going to continue most of the time before it doesn't, then you do that, right? And that's what I said here. So if we do get a 10% drop right now, say a thank you prayer to the big fella upstairs for the gift. And here's the same pattern. But on the USO chart now, right? This is the USO chart here. So the USO is another market, not oil. Oil is a different looking chart, okay? Yes, oil and USO are connected somehow, but when you look at the charts, they're actually different charts, okay? Look at the pattern on oil and look at the pattern on USO. I like USO and I'm getting ready for a nice, good opportunity out of USO because USO is giving me the pattern. That's all it is. Why is oil going to go up? Oh, stop that. It's just the pattern there, okay? Long-term monthly chart here, XLE breakout, and then the same thing for here, right? Get ready for the next big leg up coming up the next few weeks, even if we do get a short-term 5 to 10% correction here. It's even on a short, this is a weekly chart in the last 5 years. Even this chart here is presenting big moves. There's so much big moves coming, guys. Please don't be short in this market. You may be right short term, but the big profits are where? Even the last 5 years, where have the big profits been? Like going with the overall momentum and trend. And I know this because I remember I used to hang out with a guy, and he was a Forex trader, and he used to lose all his money. Every 6 months, he would come back and start to trade the markets. And he was always trading these heads and shoulder patterns, heads and shoulders and stuff like that. And on the 5-minute chart, 15-minute chart, stuff like that. And every 6 months, he'll come back. He'll open up like a 5 or 10 grand account. And then he'd blow it up. And it's like, this is not for me. And then he'll go away. And then he'll come back again 6 months later. And he'll open up another trading account. Let me try it again. And then he'll blow it up. And he's kept doing the same thing over and over again. I'm like, what are you doing? Stop it. Look at the way you're trading the market. You're looking at reversals. Don't do it. Don't do it. Don't do it. Trading is hard, right? Trading is a difficult thing in the first place. So we need to give ourselves the best chances of longevity in the markets. That's coming down to understanding where we are in big cycle things. It's coming down to like when we're putting on a position, just understand that this can be a losing trade. That's the reality of it. And so much more. Upward trend here, sideways phases. Right, so obviously I've been posting a lot of stuff here, but actually from here. So that's all it is, guys. Like we just want to give ourselves the best chances. The probabilities, not an idea. Which again, it's the thing that a lot of traders are doing now, right? The news, which by the way, there's always going to be negative news, guys. And by the way, the more negative news, the more market's going to, the more negative news out there, the more the sentiment, the herd thinks one thing, the market does the opposite. That's what the markets do. You realize that? That's why 90% of you guys right now are not making money in the markets. That's 90% of it. It's just the truth. And 90% of people that are watching my stuff right now won't be around this time next year. I continue to be around this time next year. Not that I'm perfect. No, I screw up and I make the worst calls ever. And I have losing trades. I have many months where I'm not making any money. But every year I crush it because there's periods when I do get on and I'm setting myself up to have a good year this year. That's longevity in the market, especially as a trader, right? Trader is a bit more active. I'm talking about big long-term investments here as well, like these longer-term charts. Look at this here. The best trades are after what? Sideways movement with the trend. For you guys have been following me now, even just listening to my session today, what did I talk about the L-shaped trading pattern? Look at this here. Up, sideways, L-shape, up, sideways, L-shape. It's all the same thing. And that's where, like, when you go to johnsfreegift.com, and I'll type this in here. When you go to johnsfreegift.com, that's where, like, I give away this book here. Let me show you. Right, this is the actual book that I'm giving away. How to create a fearless trading psychology. Again, at johnsfreegift.com. And then I'm also going to give you access to an actual trading course as well too. Let me show you this trading course I'm going to give you access to. It's all for free. And the reason why I'm doing that is because, let me show you this here. And this is the actual trading course I'm going to give you away. So this here was a 2-hour live session I did actually for my elite members actually. And we went through a lot of good stuff. And then I went through my number one trading pattern. Have a guess what my number one trading pattern is. There's the L-shaped pattern there, right? And then I go into more about how the markets work, trend analysis, price and time, mastering the art of true trend and momentum, looking at here with the moving averages, the total crush patterns, and who am I? What gives me the right to teach you about trading and success? And I'll give you all that for free, guys. And then you can see all the details here as well too. So you get all that. You also get access to a video here, which teaches you about my trading system as well. My number one trading system I use to this day. And then also you can get access to the book. This is the book here I'm giving away to. How to create a fearless trading psychology. And then you can see here, number one, art of the exit, whisper of the greed. This one here, I did a video on this one here recently, going through this one here about the whisper of the greed. And this is one thing I saw with the silver market just a couple of weeks ago. And I started thinking about this chapter here about that because there was so much greed in that level there. So anyway, let's continue on. Or if you'd like to get access to my daily elite coaching, that's my elite group. It's only a small that group in total right now. Then go to getjohnshelp.com. That's an application there and we can have a good chat there. Let me go to especially, and then that's where, like, even the book itself, that book that I'm giving away for free, the reason why I put that together is because as my 20 years of understanding the right thinking that goes into these markets, how do I set myself up for longevity? And then how do I understand these markets on a deepest level? And when you start to understand, and that's what the book's about, and it's not based off me, like it's based off what I've done and my experience, but it's also based off people like Jesse Livermore that I've learned from and WD again and stuff like that. It's pretty phenomenal. And so there's a lot of things out there that are setting up right now for like, even from like, if I look at a line chart here, let's go to this chart here. And this is where, like, once again, like even the good old bond market. There's all these opportunities out here. And for me as a trader and an investor of these markets, I'm always looking for where is that next move to come from? What's that thing make the next move? And I'm always looking for those opportunities there. And that's where we still have many more years to go of this bull market. We're not there yet. What happens if we default on our debt? What happens then? Has anyone studied history? The market goes up. What happens if the dollar keeps devaluing? What happens to the market? The market goes up. So if you think the death of the dollar, okay, the death of the dollar is going to cause these inflation in these asset prices. If you think we're going to default on our debt, it's going to cause the market to go up. Don't believe me? Go study Ray Dalio. He's already done the study for us. Listen to these legends who have studied history, because things happen again and again and again and again and again and again, and we can take advantage of it. And when we can learn from the legends, we can start to put the pieces together of, I would have thought if they default on the debt, the market's going to crash. But the opposite happened. Yeah. That's what happens with the market. If the herd is saying one thing, you run. And if you're with the herd, you better run. And that's why I've been for the last 6 months now? Bond market, right? Why have I been talking about the bond market so much? Especially my beloved TMF. My beloved TMF. Which is already starting to move now on a short-term level basis anyway. Big long-term picture. This is the big weekly chart here, as you can see. So big long-term weekly chart. Oh, you're an idiot for investing in bonds, and it's the death, and don't you understand, John? It's the end of the dollar, and no one wants to buy the US Treasuries anymore, and no one wants to be part of the bond market anymore, and and China and all that sort of stuff are dumping hundreds of billions of bonds right now, and yeah. Okay, that's a good buying opportunity. That's the way the market works, right? I'm just trying to share with you. And that's why I've been part of TMF. And I've got a bit of a flack as well too. So because I got back in here in November and my positions were underwater. I was 100% transparent about that. And by the way, that's what makes my coaching program so successful, my elite coaching program. Because I talk about TMF with you guys on YouTube, but my elite coaching program, they see everything I do. I only talk about probably 10% of the stuff I do here on YouTube. All the other stuff that I do, they see. That's the reason why I have the most successful coaching program on the planet. Because they actually see the truth about all these markets that's happening here. And it's why, like, I've had many of my coaching clients, I've had people being with me now for like 3 years. I've signed up for another year with me. Why? Because once you start to understand this, you can start to get you start to get the advantage of that sort of stuff there. And so, like, for you guys on YouTube, I talked about this back in November, and I was underwater. And as this market went through December and also through January through here, I started getting comments basically saying I was wrong and I'm underwater and what's happening with TMF now, and TMF is down, and that sort of stuff, right? That's what I had to live through with the comment section every time I was talking about TMF. And I'll get like, well, TMF went down 1% today, John. It went down to oh my goodness. You're looking at today. Where's it going to be in 12 months from now? Look at that, and then start to plan that path. And so the best thing about what I've done here is I haven't swayed from my position. And look at this here. Literally 1 week's worth of action has got me basically back to break even now on my position that I got back in November. On both my investment, because I invested in TMF, and I also bought options on TMF. The options expire in January next year for me. The reason why is because I need to give this time. It's not going to happen straight away, right? I need to give this many months, right? So it might be June this year I get out of my TMF, but I need to give this, even on an option trade, I need to give it plenty of time. But that's why I bought this, and also that's why when I bought the option, I bought plenty of time, because I need to give it time. And then when I'm ready to sell that, I'll sell that. Doesn't mean I'm going to be in it for a whole year, right? Again, this thing could start to go for a massive move right now. And we're talking like March, April, May, maybe even May. I'm like, okay, I'm in a really good profit from my options. I'm going to get out of my options here. Or I'm going to sell some of my investment position here. So that's what it's all about. That's the proper line through there. Now I'm looking at the short term here, right? But the big long term picture is what? the market will do the opposite to what the noise is. And that's always the hardest thing, right, guys? Like, especially for people, for you guys that are watching my stuff, even like watching the replay right now. Firstly, I appreciate you. But also just understand that's why trading is so hard for a lot of people who just getting started in these markets. And it takes you years and years and years to start to figure it out. Meaning figure it out is because you just go through so much dumbass thinking and wrong approaches. And you start to think, oh man, okay. I start to see where I'm going wrong. Unfortunately, most people don't get over that hump to then see the forest from the trees and their mistakes. They just like, this is not for me. And then they just run away. But it can be for you if you stick at it. There's a lot of lessons to be learning from these markets. And one of those is that if you have a position on right now and your view is with it, obviously with that position, and there's a lot of noise out there in the public of the news and the media and the headlines and the YouTubes in agreement with you of that position and that idea and that thought, and there's a lot of, and that's very loud, get ready for a lot of pain. And that's always hard, right? It screws with your mind because most people think that and this is where most people think lots of fear in the marketplace is going to cause the market to crash. And then that's when market bottoms, right? It's just one of the things that really screws with a lot of people's minds. Like, hang on a minute, there's so much fear. How come the market's going up? Or there's so much greed, and stuff like that. I'm not sure. Hey, Peter, mate, where do people get that from? You said, well, there's a sign possibly top for stocks. Because Bitcoin is normally topping first. Really? Well, it's been how long now since Bitcoin's been going down? Almost basically 5 months. And I'm not sure where that correlation come from, because if that's the case, the stock market better hurry up then, because it's 5 months behind. it's like if this was a leading indicator, surely at least 2 months ago, at least last 5 months, the stock market would have really started to slide by now. If that was the case, like if this Bitcoin goes down first, like there's a lot of, yeah, I wouldn't. No. And then you said we could even enter a deflation even. Right now, in the stock market, our thoughts can lead us down the wrong path. This is the stock market here. We cannot be making decisions like, oh, well, this whole thing, I'm not sure where this is coming from, but there's this very loud noise out there that crypto is down, so therefore stocks are going to be down. So I'm just not sure where that comes from. That may be true in sometimes, but we can't make decisions off that, right? We only can make decisions of what that market is doing. And this is where, like, a lot of traders, they get so much in trouble. Like, they think the dollar's going to collapse, so they're going to go long gold. That is just a crazy way to be entering these markets. So yeah, we may get a bit of a drop through here. I like more of a correction. I like more correction forward as ready cash to buy more. Top spin, yeah. Yeah, me too, mate. Me too. Me too. I'm actually hoping for a correction because I know what's coming. What's coming? Are you ready for it? Ladies and gentlemen, let me tell you the path ahead. Probably the continuation of the same thing that's been happening for 15 years. Oh, this is the time now? Really? Yep. Like the last 15 years. We have so much more upside to go. We might get our corrections, but they're not major. We're not there yet. We're not there yet. Not in the stock market. No. Remember, sentiment matters in the markets. Really big crashes come from overly sentiment on one side. Bitcoin was crazy bullish. That's why it's crashing, nothing else. Right now, there's negative news around the stock market. There's so much negative news of people looking for a big crash. So no, the market's not going to crash. Markets don't top when there's a lot of people looking for the top and looking for a crash. It just doesn't happen. Like, keep it simple that way. There's a reason why Bitcoin went down, because it was at 123,000. There was so much crazy bullishness around it. That's not the same sentiment around the stock market. The stock market will not go down on the overly sentiment of negative sentiment news. We're going to get corrections, yes. 10, 15, 20% corrections, yes. But not a full-blown bear market where we're down 50%. It doesn't form like that. Up here was 123,000 Bitcoin. You saw everyone talking about it. And then we get the drop. That's why we got the drop in Bitcoin. That's it. But we haven't got the same sentiment in the stock market. Same sentiment right now is there's an overwhelming majority still looking for a really big crash coming soon. So therefore, even if we do get a correction, it's still going to continue the upside. And also, I wrap it all around, we're still in a very big multi-year bull market on this big monthly chart. So say we do get a bit of a 10, 20% correction. That's all it's going to be. Here, that line through there. And guess what? And it's probably going to continue up because that's what it's done for the last 15 years. Top spin, yes. My trading is upgraded since I met you. Thank you for giving me a hand to kill my own devils surrounded my mind for a while. Well, top spin, right? As you can see, right, there's a lot of one of the biggest things that stops people from getting in the markets is their wrong thinking. You know what I mean? Like, we're going to these markets thinking the wrong thoughts, and therefore it's a cascading of wrong actions and wrong results. It's just simply wrong. But there's a lot of the herd mentality doesn't understand that. And my job as a coach is just to slowly help around that. That's all it is. It's just to slowly help you understand why things happen. Why did gold and silver have such a big drop recently? Golly, you heard the mania out there, right? Why do we have this big drop here just recently? And even with silver. Like, it's quite a simple process. We're in a very big extension here. But you know what's happening up here, right? Even all through here. It wasn't just here, but it was all through here. All through here, all through January. You know the noises. You know the herd. You know what's happening. And then suddenly got sucked out, right? The air got sucked out. It went from so loud to like quiet. One day. That's why I say wherever it's noisiest, be a warning. Meaning if there's so much noise out there around one direction, like there was with Bitcoin at 123,000, and then you get the effect. If you want to see a major top, like a big significant top in the stock market, we need to wait for what? Bitcoin or it's S&P 500's, going to the moon. That's not going to stop. You're an idiot. Why are you looking for tops in the stock market? You're an idiot. Like you're going to hear these noises and they're going to hear these crazy projections. That's where S&P's going to 100,000. Dow Jones going to 250,000. You're going to hear this positive noise out there. That's exactly what happened with Bitcoin. Bitcoin 123,000. And then you hear what? Tom Lee come out, 250,000, Michael Saylor, $1 million, like all these crazy projections. And then you have these people that don't even have anything to do with the financial markets talking about getting involved with Bitcoin. And Grant Cardone is getting into a Bitcoin and doing his Bitcoin, Grant Cardone Bitcoin fund and so on and so forth. It's like, poof, pop. And then we get a big drop. Do you see it? Like, right? This is the not common sense about the markets. This is sentiment. So right now, what is the sentiment with the stock market right now? And I always talk about this. Oh, by the way, I always talk about this, but if we have a look at the markets here, the reason why Bitcoin went down, nothing other than we had so much euphoria. The sentiment around Bitcoin, 123,000, was it's never going to go down. I started to see that. And then guess what? So where was gold and silver just a few weeks ago? Up here. The interesting thing is that like I didn't know when, but I knew it was going to happen, like the big sell-off in silver and gold, especially silver. But where are we right now in the stock market? Like, let's just be honest. Like, what's the mentality out there with the stock market? It's definitely not euphoria, thrill, not even belief. There's not even optimism around the stock market. It's like, where is this negative news coming from? Oh my goodness. So guess what's going to happen? We're probably even, at best, we're down the bottom here. Hope, maybe disbelief into even maybe hope if I'm pushing it. That's the stock market now. So no, look at it. Let's just be sensible about what's happening around here. So if you think that the top's going to be in the stock market and we're going to go through a big recession right now, and one, the charts haven't shown that. The charts will start to give us this downtrending environment, right? Remember, 2008 was 2008, guys, okay? Just keep this in mind. 2007 in the stock market, it took 6 months to form the top. And then that was in 2007. And then guess what I'm happy? And then 2008, we started this 2008 stock market crash was 2008 stock market crash. One whole year. So it takes time for these things to start the majorly top, form tops, and then start to see an actual true big correction. And that big drop we saw in 2008 took a whole year to complete. 2008. So it's not going to happen in one day or 1 month. And we're not in the topping formation right now. The market is still an upward trend. The market will stop doing that trending thing when that happens. So right now, there is so much more upside to come in the stock market. Short term, we're going to get this volatility, right? Because that's what the market does. It's going to give you this short-term volatility in the markets there. But this whole notion, and I'm seeing it a lot actually, I'm not sure where this is coming from, but Bitcoin's a leading indicator of the stock market. And I'm like, okay, let's look at the facts. Bitcoin's been going down for 5 months and the stock market's pretty much at all-time new highs. Stock market, don't you know? You better get going. Come on, quick. You're 5 months behind. It's like, no, stock market's not the same. Sentiment is a big thing around these markets, and the sentiment around the stock market And this is why, guys, guess what? That's why I've always said TMF, right? Why? Because we're down the bottom here. And that's my number one position or actually my number one position, my big positions, big cause for this year have been bonds to rise and the XLE, XLM, those markets to break out and start big moves. Matt, Roth. Mag stocks have terrible charts. John, is that bad news for the S&P? Well, let me ask you a question. Let's just keep this really simple. Okay. Let's go to here, okay? Oh, okay. Mag 7, all right? Not all Mag 7 stocks are doing bad, by the way. Like Google's still doing really well right now. So this is Google chart here. So that's actually not doing too bad. Not all of them. Apple's actually holding up quite nicely. Rolling over a little bit here. Bit of a strong sell-off the last couple of days. Right? But when we're talking about the Mag 7, that old thinking, which is just completely wrong, by the way, was that the Mag 7 is dragging the stock market up. Now, if that thought, what was talking about that's the whole thing about that, right? And now you're looking at big companies like even Netflix, right? Netflix is a company I'm looking to buy myself. There's the buying opportunity right around $70 for me. But I'm not in it yet. I'm not telling you what to do. I'm not even in it yet. So I may change my mind as well. But if that's the, and even things like, what's that? Microsoft. Microsoft's been getting hit. MS FT. Microsoft. And Microsoft. So if that was true, let's just look at the chart. If that was true, Ruff, right? And if that was negative for the stock market, things like even like the actual Microsoft topped out in October last year. And we've been going down now for almost 4 months. If that was true, what we're thinking, surely the stock market would have started to have a really nice drop a month ago. It's been 4 months since the market's been going down on the Mag 7. So the purpose of me saying that thought around Mag 7 dragged the stock market up, Mag 7 dragged the stock market down. Yes, we can come up with a story like that, right? Sounds really good story. But when we actually look at the chart, like even the NASDAQ, a lot of these charts are part of the NASDAQ, right? This Microsoft is part of the NASDAQ. But where's the NASDAQ right now? This is the NASDAQ here. The NASDAQ doesn't even look like the Mag 7. And the NASDAQ is majorly the Mag 7. So that's all we need to do. That's all we need to do. What we want to do, Ruff, here's what I want you to do, okay? Stress test every thought. If we think something, let's see if that's true, right? So don't take my answer as gospel. Like if I say, nah, because of, and I'm just going to come up with some opinion, which is just a bullshit story, basically, at the end of the day. Like just all we have to do is go to the market, look at the charts. Because if that was true, then certain things would have happened. That's all. Doesn't matter what anyone says. Let's look at the truth. The top's in the stock market right now. The big crash is going to start to come soon. All right, cool. You've been wrong for 15 years. It's probably going to continue up for now. You're probably going to be wrong for another few more years. Let's go. And I'm telling you right now, even like the Dow Jones. Oh my goodness. No, not that. I mean the NASDAQ. Oh, the NASDAQ, guys. This here, weekly chart NASDAQ. Let me zoom in here for a bit more. What's happening here right now? What is this? called my L-shaped trading pattern, right? If you guys have been listening to my stuff for quite a bit of time now, even today, there's your L-shaped trading pattern. Now, we're not there yet, right? We haven't broken out yet, but mark my words. Well, actually, no guarantees, right? But here we go. We're not there yet. I always wait for the breakout, but here's the L-shaped trading pattern, right? See the L-shaped trading pattern on this weekly chart? This is what the Nasdaq's doing right now. And for you guys that even watch this replay right now, or this live session now, you can see what's coming. No, once we get above 26,000, you know what's coming, right? When we start to get above 26,000 on the Nasdaq 100, you know what's coming. It's going to be another really big move. It's just, here is the what? Here is the weekly chart. This is the daily chart. And if I take everything off the screen on the daily chart, what's happening on the daily chart though? Now we're getting what? A lot of volatility, right? A lot of volatility. So that's where this short-term volatility, people go, oh, market went down today, especially for those especially those who are focused on the futures market. Oh, John, the futures market's open for a few hours and they're down 1%. Oh, but stocks are already down, futures are down 1% already. And they'll see day by day by day. But they're missing what? They're missing what's still forming underneath the surface here. Big picture. And there's a tsunami coming in the good positive direction, or against you if you're short the market. That's all. Let's use some common sense here, guys. But then also, my job as a coach is to just coach you and guide you down the right thinking around these markets. And one of those thinkings is which stops people from so much in the markets is understanding that the noise is a opposite indicator. And it actually clicked for me last year. I did a short last year and I said the fear in this marketplace is going to send this market up. And someone actually commented on one of my shorts that I did. And they said, John, that makes absolutely no sense what you just said. And I'm like, well, to me it does, right? The fear is going to send this market higher. And so he took, and I'm like, oh, I get it now. Well, now I'm educated through the markets, right? I understand. I've been doing this for 20 years or over 20 years now. So I understand this process. I understand it because I've just lived through it. You want some proof? What I'm saying is actually fact? Okay, cool. S&P 500. Big long-term monthly charts. Every time we've had one of these nice, beautiful pink arrows, what's happened at that time? The ultimate maximum fear, right? Oh my goodness, market's going down, fear, bottom. COVID, fear, bottom. 2023, recession, fear, bottom. Even tariff situation, big drop real fast, bottom. The fear in the marketplace, when there is a lot of fear in the marketplace, that is fuel for upside, not downside. And it's such that doesn't make sense. And then most people that are just starting out, even for a few years in these markets, they don't understand that concept. And it's such a hard thing to start to overcome because we try to use logic. Because our logical brain says, oh my goodness, there's fear. Oh my goodness, there's a warning. Oh my goodness, something bad's going to come. And then it does the exact opposite to what our brain thinks, right? There's a big warning sign flashing, warning, fear. It's gonna get really bad, And then you jump and you make a really mad, really emotional, rash decision. And then the exact opposite happens. In the stock market, that happens, right? And then in real life, yes, you want to be like, okay, there's a warning on my dashboard on my car. It actually happened to me last week. There's a warning sign. Go get your car fixed. Okay. I need to listen to that. In the stock market, when there's a lot of fear, that's fuel. When there's a lot of greed, gold, silver, Bitcoin, we get the effect of that. So the best buying opportunities, as you can see on the S&P 500 for the last 15 years, have been when there's been these good drops in the marketplace, good corrections, and then there's been a lot of fear. We have so much more upside to go. Yes, the dollar is devaluing faster and faster and faster. That's going to send stocks higher. Yes, but the US is probably going to default on their debt very soon over the next few years or more. That's going to send the stock market higher. Ba-da-ba. Once we can understand that, guys, I promise you, even you guys watching the replay, I hope you can see here, I'm trying to show you proof that what I'm saying is fact in the market. When there is fear in the marketplace, the maximum fear that happens throughout these years, they seem to be, they're the opposite points. And this is where, again, the herd mentality doesn't understand this because they have they don't really care about that. And they think, when was the warning sign for silver, right? When they're lining up outside the store to buy their silver. It's like, do you guys get this? Like, and this is how the 1% become the 1%, right? You see these things happen. You're like, oh, I can see what's going on. And that's what allowed me to make over 300% return on that silver short that I took on silver. So if you start that, this is why the 1% of the 1%, by the way, because the 1% see these things happen in the marketplace. It's not that they're smarter than anyone else. They just understand the patterns. This is patterns to the markets. This is patterns to investments. That's all it really is. Because everything goes through cycles, right, guys? There's a pendulum to everything, right, guys? There's a pendulum to everything. Everything, there's a pendulum. The pendulum of really, really, really greed. Oh my goodness, Bitcoin's 123,000. We're going to go to 250,000. There's $1 million Bitcoin. Oh my goodness, to the moon. This can never go down. There's going to be a pendulum back. What? Back to the other way where there's going to be now become a lot of fear. And we're probably going to start to see a slipping away effect. Right? Same. Oh my goodness, so much greed, so much greed, so much greed. Gold, silver. Oh my goodness, they're buying all these. They're rushing out there. They're buying it. Oh my goodness, there's lineups at the door to buy silver. It's like, I get it now, right? Because I've lived this experience now for 2 decades. So I see it now, right, through my eyes of experiencing this stuff again and again and again. It's like, are you going to start to finally see these patterns, John? And this time I actually did, and that's why I made a lot of money from actually shorting silver recently. I'm not short right now, no way, but it was just that short from there. And that's why with the stock market, what's happening in the stock market right now? You're definitely not people running out there jumping over the thing to buy it. There's so much fear. And to me, that's where like it doesn't make sense. Like the amount of fear that's happening in the marketplace right now. Normally, you only get this fear when the market does have a drop. Look at this here. Fear and greed index is at fear. You see that? This is the stock market barometer. How can we basically be still at all-time new highs and we're at fear in the stock market? Get ready for a big rally soon, guys. If we do get any more drop to the downside, you know what's going to happen here, right? We're going to send this barometer down to extreme fear. When was the last time we had extreme fear? November. What happened to the stock market in November? Let's bring up here. So this bottom, when we actually got that, when we got slipped down here to the bottom here to extreme fear, because of the market went down a little bit. The market went down a little bit. There you go. Right? Right there. See that circle right there? This circle right here was when the fear and greed index, and then look at this rally up here. We didn't have a big rally, but it rallied off that bottom there. So bring on a few more down days. Get this thing into fear. Because guess what? The last 12 months, when we've gone down to that really extreme fear, it was here in November. Last time was down the bottom here. Look at this here. When we're talking about like maximum extreme fear, like we're talking about 3, 2, 3, 4 on the fear and greed index down here. April. The last 2 times we had these extreme fear, that was down there. That was down there. So bring on another drop. We get any more drop out of this level here, we get a bit more downside, a couple more down days, we're going to start to ping into extreme fear again. And what's that going to cause? Fuel for the next side. Bring it on. I'm actually hoping for it, by the way. So it doesn't, look at this here. Here, remember, opposite. We're here at all-time new highs. And there is fear. Fear is fuel for upside, not warning for crash. Greed, it's going to the moon, is a warning for downside, not for it's going to the moon. So I'm actually hoping for a little bit. Like give us a week's worth of down movement. Let's have another big 5% drop here. Give us a 10% drop. That is going to be so much fuel for upside. Here we go again. Bring it on. I wonder what's happening with, let me do this here. And then guess what, guys? When that happens and we break out and we break above here, and once we start to break above here, guys, above 7,000, get ready for a 9,000 move. There's so much money to be made in these markets right now. The energy sector, XLE breaking out. I talked about that last year. The bond market, TMF, it's already starting right now. We're already moving right now. Now, it's going to take time, right? We're talking like now, but it slowly moves in the right direction, right? It's not like it's going to go straight up here, okay? Just understand that. And I could be wrong as well too. So there's no guarantees of making money on what I say. Rates are coming down. Look at this here. Big drop in rates. 10-year. Let me do this. Let me go to the actual. So this is the rates here. Let me do this here. I'll do this over here. There we go. That's a bit better, isn't it? Yep. There we go. That's a lot better. Long-term weekly charts. Rates are coming down. Bonds are going up. Rates are going down. The drop in the rates, and this is the start of a much more bigger drop in the rates as well too. This is the start I've been warning about. And then away we go. Now guess what's happening? Look at here. TLT, nice breakout of this daily charts. Bond market starting to rise. We're forming a bottoming pattern here. TMF. So where's it going? Where are we going? Where are we going? Where are we going? All this negative news, all this major fear about the US dollar, and the US dollar is going to crash, and everyone hates the bond markets. The bond markets, the dead, and all these major countries out there are dumping all these bonds because they don't want to do anything with the dollar anymore, is fuel for upside in the bond market initially. Not long term, not long term. But right now, over the next 12 months, why is the bond market rallying and starting to rallying right now? Because it's starting to click into play what I've been saying here. All this negative news of what's happening out there, the common sense mind says Why would I be part of the bond market right now when when everyone out there is dumping trillions of dollars on their bonds? That's what we think, right? But remember, stock market is opposite to what we think. That's why I'm in bonds. It's always the opposite. So for me now anyway, and again, guys, for you guys that are trading the markets and you're new, I'd say even for 5 years, it's hard to get your head around this, right? Because we live our lives one way. Our brains are there. We live our lives. We approach these markets. We see a warning sign. We slow down. We take caution, right? But the warning sign in the markets comes in the fear of the opposite. So meaning like when there's a lot of noise around the fear in the marketplace, you do the exact opposite to what there's a lot of fear. And then that's when, again, this is where the wealthy become wealthy, the rich become rich, the 1% become the 1% because they understand this stuff. This is what financial markets are all about. And unfortunately, there's always, my job as a coach is hopefully help just a few percent of people understand this stuff so they can take advantage of it. Here we go again on my own. So I'm actually expecting I'm actually expecting, looking at these markets, I'm expecting actually a little bit more downside to come out of the markets next week. Short term, I'm expecting that. I'm actually hoping for that quietly. Because like this is the Dow Jones. If we can get another bit of a drop in the Dow Jones, beautiful. This is the Nasdaq. ES. What's happening with the markets? Just give me a sec, guys. Is the Bitcoin market open? Bitcoin, Bitcoin, Bitcoin. Yeah, there's a lot of things happening in these markets right now. Platinum. Let's go here. So if there's anything you guys want me to check out, anything you guys want me to look at, just let me know. But that's why I wanted to come on to today's live stream. I just want to help you guys. Let me go to. I'm ready for a big drop or more upside in each case. I'm going to make money. Down to my S&P put option. S&P put option. And TLT and up in my call options on the Russell. So you have a put option on the S&P and a call option on the Russell. So you're short and long the. Okay. Compare the two ETFs, US Pharma, X. I can see your techniques show up in XRP. I can see your techniques showing up in XPH. Let's have a look at this. My techniques. There you go. I guess they're stocks, I'm guessing. Use my techniques, eh? I can see what you're looking at there. The only thing though is we're too far away from the moving average. So we still need, we get the sideways pattern. So the technique, what you're saying, strung up sideways, but we need for it to come to the moving average there on that weekly chart there. Yeah, we need a bit more time. We need a bit more sideways. If we do break out here, it's possibly going to be a shorter term move. It wouldn't be a big move. But if we can get this sideways pattern to continue sideways and let this moving average start to catch up to the price. Hey, Topspin, what's your actual real name? So, Mark, what are your thoughts about the answer Bondi gave to how the Epstein files are processed? Some think so many go into jail. I haven't been following the story, Mark. I don't know much about the story at all. Like, I don't know. All my focus has been on these markets and all this other news and stories and headlines and all that sort of stuff. I don't follow a lot of the news. I want to major in major things, not minor things. That's not going to make a lick of difference to my life 12 months from now. So my focus has been purely on these markets, trading, investments, opportunities, what's happening. And that's where 100% of my focus has been. And also my coaching, helping my coaching clients do really well this year as well. and all that, me focusing on all that sort of stuff, the Epstein files, and again, I don't even understand it all. I don't even know. Like, I don't understand the whole thing. I don't understand because I haven't been looking into it. Because it's just not. Let's just say I spend 5 hours going down that rabbit hole of understanding the whole process. Then at the end of the 5 hours, what's that mean for me tomorrow or next year? Or like, how is that helping me get better in at the thing I want to do? It's a dead end road for me. So I'm not saying it's a bad thing to keep an eye on it, but for me, I think you're better off going to sit on the beach and meditate for a half an hour. That'll be so much better for you long term than focusing on all that sort of stuff, which again, the bottom line is no matter what is happening, it's not going to make a lick of difference to your life. So I just don't focus on that sort of stuff. I have no idea what's happening when it comes to news and the economy and all that sort of stuff. I don't know. I just don't know. My 100% focus is looking for and trading really well. They're never going to default. Yeah, they will, Peter. You know that, man. Never is a big word. Of course, they're going to default one. One day they will. It's just a matter of time. Of course, they're going to default. Just look through history, man. Look through history. History gives it 100% certain there's going to be a default coming soon. Or over the next 5 to 10 years, there's going to be a major default. Not sure where you're getting that thought from, man. But if you study Ray Dalio stuff, the big cycles, and you'll see that things happen again and again and again and again. And you know we're at a tipping point where it's going to start to, yeah. GTES. John's JH scan. Not much good scan results. Okay. Checkout symbol GETS. GETS. What is that? GETS. Check out this symbol GETS. Is it a stock? Is it? Right, yeah, there's nothing. Yeah, nothing coming up. YCS, leverage ETF. YCS. Pro share ultra short yen. YCS. Just trying to. That's it. This one right here. 50. Yes. Okay. So you're short the yen. Is that right? So this here is betting the yen's going to go down. Is that correct? So you're short the yen. Pro ultra short yen. Yen goes down versus the USD. Yeah. Okay, so if we actually look at the USD yen here, yeah, it's hard to say. The reason why I say hard to say is because we're in no man's land here. So we're in no man's land here, and are we going to go down USD JPY, which is obviously the yen? Yeah. In this situation, when the market's going sideways like this, it's like toss a coin, right? Flip a coin. But all I do say is that if the yen does hold here, if we start to hold here, meaning like you can see what's happened here, right? Look at this here. We went up and we came all the way back down. We went up, came all the way back down. If we go up and come back down and we do like a 50% Fibonacci retracement and we actually hold here, and then we hold the 50% level and then we start to do something like that, that 50% level, if we get that action happening through there, and I'll make it just a bit nicer now. So right now, if the market does hold above this, because the last couple of times here, it didn't hold the 50% level. So you can see here, right? Low to high, it came straight down. What that simply means is there's no trend at all. It's not where there's a lot of indecision, fighting it out. Who's going to win? Who's going to win? And then we have another big move up, right? And then we go for this other one here, which has started at the low point there, rallied up to that high point there. Had a bit of a pause around the 56%, but it came all the way back down again. Again, fighting it out, fighting it out, fighting it out. Who's going to win? Who's going to win? Who's going to win? Who's going to win? So now, once again, we're at this point right now is like, who's going to win? Who's going to win? Who's going to win? Therefore, we're at this level here. So therefore, if the market does rally up through here, and then we come back down to here, 50%, and it holds, and then we start to pick back up. This here, right now, this here is the sign of now the buyers coming in. Finally, someone's taking control. Sellers, buyers and sellers are fighting it out, right? Down, up, down, fighting it out all through there. So there's fighting it out all through here, as you can see. But if the market comes back down, this is now the sign of actually someone taking control, or there's one side now more dominant. And if that happens, and we get a break above this level here, then now we're probably likely to evacuate, and that's going to evacuate out of this whole level through here that's been here for many years, for a couple of years. And then we're likely to start to see the yen, USD yen start to break up. So that's the view of what I'm seeing with the USD yen. Right now, there's indecision, fighting it out, flip a coin. There's no probability either side. But if the market does start to show us the hands and start to see one side be more dominant than the other side, well, then you know what's likely to come from there. I'll give you an example here. One of the stocks I've been talking about with my elite group, I'll give you guys a bit of insight to this, is the exact same thing. One of the stocks I've been focusing on with my elite group has been, and I'll give you an example of what this is. Let me take off the moving average here and just the chart itself. CVX. This is one of the guys. This is one of the stocks I've been focusing on with my elite group here, right? So CVX is actually breaking out now from here, as you can see. Let me take this off the screen. Okay, this is the daily chart here, and this is what this big move through here. This is one of the markets we've been focusing on. We focus on so much stuff with my elite group. A bit of insight to what I'm talking about here. Okay, so that thing what I just mentioned there a minute ago about who's more dominant, we can get no one dominant. They're buying, buyers and sellers are fighting it out. Okay, And then suddenly we get someone dominant, and then that whoever takes control, it goes there. In this case, it's the buyers. So if I bring you up to here, this is the weekly chart here, right? Look what happened here. Same thing, right? What happened through here? So if I draw this through here, let's see if I can do this thicker, okay? There we go, much thicker. And let's make you blue, okay? So as you can see here, right? And we're fighting it out. We're fighting it out, right? Look at this here. Fighting it out, up, down. There's no trend. Here we go, double top, double bottom, almost the top again. Fighting it out. Look at this here, up, down. Look, up, down, up, down. They're all fighting it out here, right? There is no trend at all. There's no one in control. There's no probability. It's like, what's going to happen? What's going to happen? What's going to happen? What's going to happen? And then look what happened. What happened here? The market started to change complexion. Where we rallied up, we broke down to where? Here is what? That level there is 50%. So then finally, after some time of this sperm buyout, the buyers came in here. The buyers held the 50%. And then guess what ended up happening? We actually then broke above this high here, right there. And that said, right, finally now the buyers are starting to take control here. Through all this period through here where the blue is, this here was, I'm not too quite sure. Right? This has happened. This is a weekly chart here. The reason why I was focusing on this with my elite group was because I was saying, guys, the buyers are holding here now. And then when we got the breakout up here, did that transfer over? Oh, no, it didn't. But when we held here and we held this point through here, and then we broke out here, I said, guys, this is getting ready for a big move. Why? Because the buyers have now finally taken control. There's someone taking control. What that simply means is we actually had that all through here, up, down, up, down, up, down, up, down. No 50% retracement. But since it came down here, it held the 50% and then broke out. I was talking to my elite group. I'm like, guys, this is one of the stocks I've been focusing on. Here we go. We're getting ready for a big move. And then my first target at this level here, I've got much higher targets, but my first target for this here was the high point up there, which is that high point up there. And then we're probably going to get a bit of a pullback soon, but I have much higher targets. But the first target was that resistance level through there. So then if I bring this up from the daily charts there, you'll be able to see what that simply means there on that daily chart there. So this is an example, Thrifty, of what I'm talking about. This is why we need to read the chart, right? Because the chart's giving us some signs about what's going on in that market. The headline, the news, and all that sort of stuff is not going to help us. This here, look at this here. Years and years, for the last couple of years coming down, no one in control. Double tops, double bottoms, fighting out. We finally got the buyers coming 50% held. Then the buyers came in, and then boom, we had this big move. And actually, a lot of my elite members actually did quite well off that move there. I think some of them are still long right now. But I do see, in a big picture scheme of things, I actually see myself, by the way, I actually see what can I do here? I'll do highlight again, right? I actually see this market maybe having a bit of a pullback here like this, right? And then I'm expecting another big move to the upside and make that green. But I'm expecting this whole thing here is the setup for, I see a lot more upside to go. So it's always watching to see what's going on. And for me, it's always to see, okay, who's in control? Who's in control simply means trend, 50% retracements, all that sort of stuff. And when there's no one in control for a while, and then we start to get that, that's when I'm like, oh, and again, this is where for my elite group that I have, this is one of the stocks. I have many stocks I'm focused on, but this is just one of the stocks. I was talking about them, getting them ready for this big move up here, and we end up getting it. Let me take all this off the screen so you can just get a good idea of what we're talking about here. There. Man, Trading View is awesome, isn't it? All the drawing tools you can use. It's much better than TC2000, meaning for the function and the education, the analysis I can do here. So that's all it is. So when we're looking at now the yen, do we get the same thing here? Meaning, once again, we need to watch to see, does it come down and hold the 50% over the next couple of months? If we do, now it's the exact same thing, right? The exact same thing. Fighting it out, fighting it out, fighting it out, fighting it out. Oh, and then suddenly what happens? Up, down, 50%, holds and breaks out. We get that. What's my saying? Where's top step? Top step. Top spin. To the moon, to the moon. And however that affects your position there, then yeah. Meaning like if that goes up and that means your position is going to go down or whatever there. So that's what if we start to get that, that's why there. And that's where like if you start to look at things like from a big picture perspective, big picture, right? We do this level here and we go to the S&P 500. Look at this here. This is S&P 500. What have we been doing here? Up, down, 50%. Another big move up from here, right? Big move up from there to there, as you can see. Up, down, 50%, right? Look at this here, which is that major one through there. I'll just take off that small little one. But if we're looking at the major swings, up, down, 50%. This is called a strong bull market. When it holds 50% and goes, look at this here. That's all it's been doing. So let's just say we do get a drop here now. Oh my goodness, the sky's falling. No. OND target. Right? So let's just say we do, and I'll draw a bit of a trend line here. Let's have some fun here, right? So that's my trend line going up through there. And people are trying to short this thing here now. Let it come down for a bit. Let's just say we do get the 50% retracement again. And we go from here. Where's 50%? 50% is where? Bring it on. Bring on the 50%. Strong trend. That previous resistance point is also around that level as well too. Where's my... Let's have some bit of fun here, right, guys? Let's have a bit of fun here. To the moon, to the moon. Where is... I probably saw it, but I just didn't even see it. I probably saw it, but I didn't even see it. There you go. I'm trying to find... Where's my square? Square? Oh, smiley face. Right there. There you go. That's called happy. Market go down happy. Why? Uh-huh. 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 That's called happy. Bring it down to 50%. So, and that's that previous high point too as well too. Which means what I'm talking about there is, where's my box? Actually, you know what? Let's do this here. So that level through there, and I'm going to change you to thick. Let's make it thicker. That's what she said. I hope not. Is it in yet? Oh, shit. I'm in trouble. Who am I dealing with here? Support level. So that level there, as you can see, that level, if it did come back down to that 6,000 level, even a bit lower than that, this whole area through here, perfect. Perfect. If that did happen. Now, I'm not banking on, I'm not saying this is going to be the exact high because you know my whole thing about this. But there's two scenarios. I have 9,000 target in mind. There's your 9,000 up there. What happens? Scenario one. Right, scenario one. Boop, 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 boop. Scenario two. Boop, 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 boop. The end result, 9,000. Now, that's just me drawing trend lines, guys. That's not me saying, well, it's going to get to 9,000 in 2028. That's not what I'm doing here, right? It's an overall projection of what I see coming. And maybe 2028. But those who think right now we're going to get a 50% retracement, and those who think that we're about to see this guy there's a lot of pain. There's so much fuel behind this level here. There we go. That's the whole thing about the stock market. Let's see. Can I? TradingView is so awesome, isn't it? It allows you to do all these drawing trend line stuff. To the moon, to the moon. I'm going to save that, eh? Look at this 10-year rate. It is rolling over. A rise in the bond market. It's starting. A rise, my friend. TMF anyway. And we are about to drop out of this big this big pattern through the upside. Look at this here, squeezing up 30 year. This is the 30 year. Squeeze up. All this here rolling over. Get ready for a drop, and we're probably going to head back down. Whenever this happens, we get a drop probably around that next support level there. So 30 years probably going to start to head down towards, not straight down, like it's going to make it. It's likely to make its way down now to about that 4% level. On the 30 year. That's what this pattern does. You get this here, then you get a breakdown out of it, and then it gets to this next support level down here. Same for the 10 year. The 10 year is probably gone to that level there. So probably on a short-term target will be that low mid threes. Right now we're still in fours, so mid threes. But then I think ultimately it's going to head down towards this level here, which is going to be probably low threes. So 3-2 somewhere out there. Just looking at this next level here. So probably even looking at it's probably even make its way down to 3%. So that whole 3.5, this whole area here. So the first target will be 3.5%, but then I think it's going to ultimately make its way down to 3%. DMC, it does, doesn't it? To the eye, it does, doesn't it? But it's not. It's actually bearish. What's happening right now is bearish. It looks bullish, but it's not. It's actually bearish. That's why we're getting the rollover right now. That's why the 30-year, as you can see, the 30-year has been completely rejecting it, meaning it would be, this looks bullish, but it's not. It's bearish. It fakes you out. The people who read and DMC, I understand what you're thinking. You're probably, the technical analysis of the world is this is an ascending triangle pattern. So therefore, this is a bullish pattern. I get it. I get it. But when you start to see certain things happen in the markets, you start to see what's really happening here. And what I'm talking about is this over here. Let me teach you something here. When you start to see the buyers start to lose the strength within this pattern, it's not a bullish pattern. It's actually a bearish pattern, and we're likely to break out and break down. So a lot of these patterns here are actually reversal patterns. They're not continuation patterns. So what I mean by that is this. Let me show you this here. You can see here, look at this here. See actually how we had this very strong move to the upside, right? That there, let's make that, yeah, we'll make that green, right? So a very strong move to the upside. See the buys? Whenever we had these big buying legs, notice how strong they were from there, right? Strong and strong, right? So the buying legs, this is going to advance now, advanced stuff. But this is how you really see the depths of what's going on actually in the market, not just from a triangle pattern, but from what's actually happening. So you see the market has gone strong up like that through here. That's been these buying legs have been quite strong. So if that is strong, what happens if the market starts to do this? Or even that? That's now showing you that the buys were strong, but then the buys are becoming weak. Look at the angle. Now, this is advanced stuff here, so I don't want you to get confused with it all. But this is called geometry of the stock market. This is what stuff you learn it from. It's like a price and time technique from W.D. Gann. And when I started to understand this here, you start to see what's happening underneath the surface. You start to see the strength in what's going on. And if you've seen in the past many years that the buyers have been quite strong in their legs, strong up, they've had this like this vertical move to it. And then now this last few months, we're now getting a slowing action. DMC, I'm not sure how long you've been sort of keeping up with the things that I've been saying, but now this pattern here was the thing to tell me we're now getting ready for a rollover in the interest rates. And so from this pattern here on this big weekly chart, that's why we're getting what? That's why we're getting this hit. And it's the same thing for the 10-year as well too. The 10-year is even better. Look at this here. The 10-year actually what? This looks like a bit of a bullish pattern here, right? Look at this here. Like you could even make a case for what? Looks pretty bullish here. Or if you want to actually draw the trend line from the big major low, I can even do like that through there, right? Same thing. It looks pretty bullish from here. But again, same technique applies. Why have I been starting to call for the interest rates to come down? Same thing, right? You're starting to see the strength of who's more dominant in the markets here. So once again, that was a buying leg. And let's just make that green again. Strong up, strong up, strong up, strong. Look how strong these buying legs are. Why is this so much weaker, right? This is strong. This is now starting more, the angle's flattening out here. When this happens, and in the past, we've had these good, strong buying legs, and even through here was a bit of strong buying leg. It's telling you the buyers are going up, but they're very weak through here. And you see the angle of it, right? Again, this is why I can teach a lot of this stuff with my elite group, by the way, at getjohnshelp.com if you're interested in the coaching program. Getjohnshelp.com, that's an application. But this is the stuff that I teach. And this is why DMC, I'm trying to explain to you why I was looking for lower in rates and higher in bonds, this was the main pattern, because when I saw this, I knew there's a massive probability we're going to, just like here, start to roll over in the rates, and which we have been doing here, because that's actually a very weak sign to the upside, which is this here. And then we've been getting this going on through there. So it's definitely an advanced type of pattern. It's an advanced type of sort of understanding how these markets. But once you start to understand what I just said there, you start to see that that the buyers were so dominant for so many years, but this last leg to the upside, this last movement to the upside here, especially like this is the daily chart, this last movement to the upside was being so weak here overall. We get a lot of volatility in the daily charts, as you can see, but this is why we can't make a decision on the daily chart. Look at all that volatility there. We go to the weekly chart, we start to see it. But DMC, does that make sense, what I'm trying to explain to you here? It's an advanced technique, but it just shows you that even though it's going up, the buyers are actually losing steam here. They're actually getting much weaker, and it's actually showing you in the actual legs here, and why we've been getting a drop here now in the rates, because the buyers, even though we've been going up through here, it's so much weaker compared to the past. The buyers are actually losing steam, and then the sellers come in, and that's why we're getting the drop now in the rates. So that's why I've been so bearish on the rates for the last couple of months and bullish in the bond market, because this is one of the patterns, and then we're probably likely to see this thing start to come down through there. It's such a powerful, powerful, powerful pattern, because you start to see the depth of what's really going on in the markets. And a lot of people who don't understand that sort of stuff, and again, it's taking me a long time to figure this out. That's why I do coach people, because I help people with this stuff. You start to think, oh, it's a triangle pattern, we're probably going to go up. But once you start to see this, it's a triangle pattern, but a lot of these times can be reversal patterns. This is the same for even the bond market right now. What's happening with the bond market right now? TOT. Let's now flip it on its head. This is a what? This is a weekly chart here, right? This is a weekly chart here. Let me do. Can I do this here? So this is a weekly chart. This is the TOT market. This should be what? This should be a bearish pattern. Flipped upside. This is the opposite pattern, right? This is now descending. The other one was ascending. This is descending. That was ascending. But now flip it on its head here, right? Let's see. The buyers were losing steam, so therefore we're likely to roll over in rates. But let's check out the actual bond market. Look at this here. Let's go to the actual legs, right? So we had, this was the leg through here. That was a leg through there. Right? Notice the strength in this movement here, right? Down, down, even through here, down. So we've been going down here, right? The sellers have been quite strong on this weekly chart. Look at this here. Look at that green. Look how flat that green is, right? Look at that overall pattern there. And as you can see, I'm drawing it in the middle of the movement to try to get the overall angle of it. This is called the angles. So we actually went from, as you can see, all through here, we had strong sellers. The sellers were strong. It's completely changed now. We've had this selling leg, but see how weak it is. That's the opposite, right? That's the opposite to the rates. And now, because we're getting this, it's going down, but it's becoming very weak on the downside. It's no longer strong. The sellers are no longer strong. You end up getting the reversal for there. And then it breaks to the upside, doesn't break down. It's one of the most powerful things we can learn about the markets. It's called the geometry of the stock market, or reading the strength of these moves. And therefore you see, oh, I know what's likely to come right now. And again, this is where Because most people are not focused on the actual chart itself, they're focusing on indicators, news, headlines, fundamentals. They're completely missing these stories of what's really going on in that market, and therefore they're missing what's likely to come. And it's these things that help me guide me to why I've been so bullish on the bond market is because of this here. Yes, we've been going down, 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 but right now, this whole point all through here has been telling me the sellers are actually losing steam here. The buyers are about to come back in. It's via this. Again, it's called the geometry of the stock market. And basically, it's a WD GAN technique of what's called price and time, if you want to get technical of it. Looking at the strength of the moves, because the strength of the moves tell you what's happening with the buyers and sellers. Are they strong? Are they weak? All that sort of stuff from there. And that's why I see it more clearly on TMF. But TMF is actually, it's much more evident on the actual bond market there. And that's why now when we see it once again in rates, that's why we're getting a rollover in rates right now. It's starting to get weak, and now we're starting to roll over. And once you start to understand this stuff that I'm teaching here, oh my goodness, your life is going to completely change because you start to get the much more deeper insight. You're not just saying, oh, look, it's an ascending triangle pattern. It's probably going to go up. Looks bullish. And then you read in the depth of what's going actually on in the market, meaning by looking at who's the more dominant, you start to get a much greater insight on what's really going on. And then your whole world starts to change because you see what I've been saying and why I've been saying we're getting ready for a drop in rates. The same for the 10-year, same thing. I said we're getting weak here. We're going to get a drop in rates soon. Why? Because of this bit right here, which is this bit right here, which is what? Weak. Buys. Yes, we had a buying leg. It went up, but it was so much weaker. And then you get the sellers start to come in. Complete game changer. Complete game changer. And then you get a good guidance about what's actually likely to come, which reasons why I've been saying get ready for a drop in rates. And that's why we're being seeing the drop in rates, because I didn't know when that was going to start, but I just saw this coming. And now we're getting it. Hence the reason why I'm long the bond market and short the interest rates, because the market is telling me there's so much power in the chart itself, as what I'm explaining here, that if we learn how to read the market, read this chart, not indicators, fundamental news, opinions, but the actual chart, then you start to get and then you start to see why certain things happen. And the unfortunate thing is most people are not focused on the chart. Most people are focusing on the indicators of the chart or fundamental news about that market or whatever. Just give me a sec. Awesome. No problem, DMC. There you go, man. I just taught you something. And I promise you, man, when you start to understand things like I just explained there, if you're still around, DMC, you start to get a greater insight to these markets than 99% of people, than 99 people are even seeing in the markets, because they're not seeing this stuff. And the reason why they're not seeing, because they're not educated. They're not looking for what's called these angles. We've had these strong buying legs for a while, and then suddenly we've had a buying leg, but it's now much weaker. That's giving you an insight on what's going on in that market. Hence, and then now, what I've been calling for the last couple of months is actually starting to form. Rates down, bonds up, and all that sort of stuff from there. There's so much power in it. There's so much power in these charts. Long term, short term. KO has broken out to new highs. Yes, Thrifty, yes. I'll bring this up to here, actually. And actually, traders, if you go to johnsfreegift.com, I'm giving away a free book, but I also give away a free trading course. The stuff in the free trading course as well too is about the chart reading stuff that I learn here. So if you're interested in that, then just go get access to that. Go get access to the free book around the mindset and proper thinking, and then the techniques in the free trading course as well too. There's about 8 videos in that course teaching you the techniques around that. Or if you're looking for more hand-holding, more coaching, then you might be good for my elite coaching group. If you go to getjohnshelp.com, there's an application form there, and you may be a good fit for being part of my daily group here. What's that? Daily, weekly. Let me bring here. So yeah, Coca-Cola is actually one of those markets we've been focused on in my elite group as well too. So if I bring this up to here, Coca-Cola. So if I bring, let's go Coca-Cola. Where are we on Coca-Cola? KO, there we go. So here, yeah, so Coca-Cola. So yes, Coca-Cola's broken out to new highs, yes. Now, as you can see, I've already been doing some drawing trend lines. This is actually one of the stocks we've been focused on the elite group. The reasons why is because Thrifty, I'm not sure if you're still around, though I actually have a target of that 86 level up there with Coca-Cola. So not straight away, but what I'm hoping for is, actually I'll bring this up to here just so we can get a bit more better view of the chart. This is the chart here. So what I'm hoping for is, I'm hoping to get a bit of a pullback. I want to see this moving average start to come up through here. We've just broken out of doing nothing here for a while. There we go. That's the trend line's fixed now. So we just broke out. And so I have an 86 target on this one here. So I'm hoping to get a bit of a pullback first and then see this thing start to rise. But yep, as you can see, mate, this is one stock that I've had on my watch list. Could be a good trading opportunity. So I've been getting my elite group ready for potential opportunity here. I'm looking at heaps of markets and heaps of stocks and heaps of things, as you guys can see. Because there's so much opportunity everywhere. Bonds, stock market. There are opportunities everywhere. Even Netflix. Right? I've talked about Netflix, but look at Netflix. Actually, I'll bring on Netflix on a bit much more weekly, bigger chart, bigger, longer term chart. Look at Netflix. Netflix has been getting crushed. It's probably going to have a good bounce coming soon. If we get down to the $70, there could be a good bounce. Now, if Netflix is if Netflix is in big trouble, then we might only get a bounce and then it may roll over. So I doubt it. Like, Netflix is huge. So, but if we do get down to the 70 level and then we bounce, I see possibly, let me go to even a 38% retracement. So I see a bounce from that level there, that level there. if we do get down to the 70, which is this 2 levels of support level here, if we do get that, and let's bring on the daily chart now. If we do come back down to here and we bounce, so let's do this here. So if we do get down to there and we bounce, just trying to, there we go, that's better. Then probably what I would say is that we're probably likely to get a bounce and maybe even rally up towards the 90 level on a shorter term target. It may be continuing this very big bull market. You didn't talk about gold, so I'm leaving. Okay. Or what you could have done is, I'm learning a lot of good stuff of how to read these charts. Let me go apply some of that stuff to gold myself so I can use it myself. So I don't have to rely on anyone else. Oh, what a quickie dink. Bye. So yeah, so Netflix is one of those markets as well too. There's heaps of opportunities out there, guys. Heaps of opportunities. But yeah, Netflix is definitely getting crushed. Okay, so let's go. Let's actually have a bit of fun here now. I want to go through and let's actually I'll focus on some of the long-term stuff. Let's focus on some of the short-term stuff now. So it's just real short-term. And let's bring on, say, 6 months worth of charts here. And what I want to do is I want to start to go through some of the markets here. I want a short-term level basis here. So let's have a bit of fun here to see what's happening on a short term and what could be coming up this next week. Okay, so real short term, long term, I'm very, very bullish, but short term, you can get a lot of gyrations. Look at all this volatility on the daily charts. This is where people have an idea on the big picture analysis. I really understand what's going on right now. And right now, the buyers and sellers are fighting out short term. Let's go 6 months, even go 1 year, a little bit more than 6 months. So it does look like there actually is a bit of a short-term trend line coming up through here on the S&P. I'm going to remove you because I don't need you anymore. That's that big longer-term trend there. So that's actually definitely a bit of a sign there. It may or may not be relevant or evident, but it may be something there on short term. What I do say is the if scenarios. This is where if scenarios come in, right? If we hold here and we break above 7,000, you know that's where we're going, right? Well, I don't know for sure. I could be wrong, but there's a 51 chance we're going to go there. Let's say that. But I'm still long the stock market. Yes, I still have call options. And no, I'm not hedging. I saw someone comment on my YouTube video a while ago. I was like, are you hedging your call options? Like, why would you hedge something when you're very confident in the direction? If you have to get into the market and then hedge it, that means you're not confident in your call. Don't do the trade then. I'm long and I'm long. I'm not going to be long and short. So I'm very confident in the next 6 to 12 months, we're going to start to see this thing rally up. Now, it may not get to 9,000. Like, that's a pretty high target, or it may. All I do say is where we are right now, this whole thing here, sideways energy building. When the market goes sideways, it's building all this energy. We're still building the energy right now. So they go back to 1 year. This is the 1 year chart. So we're still just going sideways here. Volatility, sideways. This here is building energy. It's building energy. It's still fighting out. What happens when it breaks? It starts to release the energy. What does that mean? Big move is coming. Now, it could be down as well too, right? That's where we never know. But my trigger for me to say we're likely to see that move up. And first target would always be like the first target would be the 8,000 level. That's the first target there. Because as you can see here, the reason why I say that, the first target would be 8,000, because the market loves these round numbers there, right? Look at this here. If you look at the round numbers here on this here, you'll see what? You will see, firstly, that level there. And let me see if I can I change you? Can I change you? Yes, I can. Let's go purple. Oh, pretty purple. There you go. Where was this major support level through here? What number? 5,000. Okay, cool. Oh, what did I just do? Let's go to here. So let's make you, I'll make you there. And actually, let's go blue this time. Blue, yeah. That's nice. That's a bit of. Yeah, there you go. Right. Duplicate. Now look what happened. Look at this here. 6,000. We had what? Problems, right? Round numbers. 5,000. Problems at 6,000. Then what ended up happening? Oh. Then guess what? Then it ran to what? 7,000. Now it's having problems at 7,000. Once it breaks 7,000, where's it going? Probably 8,000. And then my ultimate target is what? Round number once again. The projection of what I see is the 8,500, but the round numbers where market loves to run to is that 9,000. So as you can see here, look at the round numbers here. I'll do this here. So each round number, 5, 6, 7, 8, 9, has been a significant level to the market. What happens when we break 7,000? Well, at least I believe we're likely to be on our way to at least 8,000. That'll be the first target for me. Because as you can see, this is what happens. So let's go to the. I'll be going with King Russell. King Russell, baby. Yeah, King Russell's already broken out, isn't it? King Russell, baby. Look at this here. King Russell's already broken out. Yeah, so I agree. I agree, by the way. Or meaning like, okay, this is the short-term viewers have already started to break it out and start this beautiful upward trend here. Let's go to the 1 year, 6 month view. Actually, 1 year view. So short term, this is what's happening on the Russell right now. Over the last 1 year, we're starting to break out. Beautiful upward trend, higher low, higher low. But then the overall targets off the pattern here is that 300 level. So this could also be a good trading opportunity for me, because what am I getting here? What is this? It's my L-shaped trading pattern. Oh, there we go. There it is. There she is. Oh, what happened last time? We look at this here, and then we had another one here as well too. Oh, good. And then she does it again. Let's go purple. Look at that. L shape, nice move up. It's happening again. Here we go. Now I'll say L shape. All right, but as you can see, it's like a slight little down. So guess what's coming? Maybe. But if we do break out, especially above Z highs, especially with conviction, let's go 6 month view now. So let's zoom right in much closer. Zoom. If we do get a breakout here, we're probably likely to start to see another move up. And once again, if you actually look at the trend here, we've actually been doing what? Low to high, 50% or less, continuation. Boom, boom, strong trend. Let's go low to high. Look at this here. Low to high, came down to the 50%, actually held the 60%, and now we're holding here. So if we break out above this 270, that could be then the move that leads us up to 300. If we're looking at just an extension though, off that, let's just look at some extensions. Actually, meaning just like low to high to low. Yeah, so that level there. First target would be 280. That's the 1-for-1. And then the next target, 300, which is basically up through there. So, yeah. Everything's looking quite bullish on the Russell. It's really beautiful. And plus, it's also big picture now, broken out of this pattern here. So we're starting to see a move. So there could be a nice trade for me on Russell. That could last a couple of weeks, maybe even a couple of months coming up soon. But this is here. And then I bring up this here. And we start to look at, say, my moving average as well too. Boom. And this is what's going on. So take that off the screen. Beautiful pattern. Beautiful. B-E-A, beautiful. And also at this level of resistance as well too on the Russell. So Russell's beautiful. Russell is magic. I'm not sure. DMC, are you still in the room? I'm not sure if you are. But I just noticed the pattern, what we're talking about before with you, DMC. On the Russell. There's another example here that I'm seeing right now. Price target for oil in April. Jeez. Strike price for oil in April. Well, the actual oil price, itself, let's go look at that there. Not USO, right? USO is a different chart. Well, let's go check it out. Let's go have a look, shall we? Did I? So price target for oil in April. Actually, let's actually go to let's go to the oil price itself. Okay, so using a timeline like an actual time in April, no idea. No one does. You can't do that. What we can say is what's going on here right now. So we're still in a very big compression on the downside, but it's the same thing by looking at these markets. So what I'll be looking for to see whether we going to break out is what actually happens down the bottom here. So what I'm looking for is this. This is the daily chart on oil itself. in April, March, April. Oh, okay. So price target for April, you have $55. I actually think you're correct there. Or actually, I think that actually is smart. But I think that that could be short-lived as well too. Meaning, right here, what do we get? So what you want to watch out for is that we may get a drop down. Oh, you said 55. I have $55 strike calls that expire. Oh, they're call options now that expire in April. $55 calls on oil. Okay. So what I see. Oh, on XLE. Okay, let's go look at XLE then. So due to the fact, Adam, the way these markets work is that they, even if they're in a very big bull market, they go through these phases, right? They go through swings, they go through phases. So even if we go through the gold bull market that we've been in for a long time here, right? As you can see here, the reason I'm showing this, I'm trying to show you what's going on and what can we expect moving forward. And look at this here, right? So if we see the market will go through up and then it'll go for a pullback and then it'll go up and then a pullback and then up and then like this is what the market does, right? We don't just go straight up. After a big leg up, we might go for a pullback and so on and so forth. So after a leg up for a while, you could expect either this for a bit as it rests and refuels, or possibly even something like that for a bit. That then after a while, even though it's in a very big bull market, then you would expect to see in a very big bull market, you expect to see that thing to continue up there. But we go through these swings here. The market never just goes straight up. Even the reason why gold's been going up for so long, it hasn't been going up every day. We've had these periods of that was a 4 month, that was 3 months, that was 3 months, and so on and so forth. So with that being said, this is what markets do. The XLE market to me is getting very close to another one of those phases where we could possibly get a pullback for a couple of weeks, maybe a month or so. So XLE just broke out. I believe XLE is a very big long bull market here. But I also do know, just like all markets, we're probably going to get a bit of a correction here soon. And so if I go to my weekly charts here and I start to bring on, say, for example, my moving average, my 24, right? What do you notice about here with my 24 moving average on this chart? You notice that it doesn't get too far away. Right, look at this here. We don't get too far. When we get too far away, we end up coming back to it. Even in very big bullish environments, we end up coming back to it, coming back to it, coming back to it, right? So we don't get too far away from it. So right now, we are a bit too far away. I'm not saying that we can't keep going up from here, but there's going to come a point in time where we're going to get a nice, good, healthy correction, and these moving averages are going to start to come back into play. So that's the weekly chart. This is also the daily chart to the right from here. Again, same thing with my 52 on my daily chart. When we get too far away, it's done too much price, done too much movement. Then we're probably likely to get a bit of a pullback here. So for me, Adam, as a new trading opportunity, I see a pullback coming first. Now that pullback might last a couple of months as it's gone through the gyrations and doing its thing. And then we start to make our way up there. So what could happen is we're here right now. This is the moving average through here. As the moving average starts to make its way up like that, as an example, then we actually just do this here for a couple of months like that through there, which if we did, that would be absolutely just beautiful. And then we break out like that through there. like that through there. If that's what we're probably going to get soon. And then we're going to see another big leg to the upside here. But this here may take a few months for it to go through. So being long right now is very risky, because especially looking at shorter term options like you got, because we're probably going to go through a bit of a pullback soon. Now, again, I don't know. Like, I'm not saying definitely. What I do know is we're getting towards the end of this move soon. So we could even have another push to the upside here. We could even go up like that a little bit more and keep going for another couple of weeks. And then we get the pullback. So but depends on when you actually got into it, Adam. Did you get into it just recently? If so, that's the worst time to get involved with something. But depends on when you got into it. Ooh. Oh. You have a $55 strike. So it looks like you got into it just recently. Yeah, if you did, that is the worst time to be buying something. Never get into something after it's already made a big move. It's already made the move. How do markets work? They go up and then they go down, then they go back up, right? We go through these motions. Never get into something when it's already been in this phase for a while. That's the worst time to be getting it. Getting in up here right now on XLE is the most riskiest trade anyone can do. Because why? We're going to go through these pulls. Look at gold. Gold is a big, massive bull market, right? But it goes through these swings. Oh my goodness. Don't listen to that bullshit, man. Look at the chart. Look at what this is what markets do, right? Cycles mean bullshit. Now, yes, Adam, we could go through a pullback through March, right? And then April, we have a big move. That may be the case. But getting into something after it's already made a big move, look at what this chart does. And look at what markets do. This is one of the most amateur mistakes that people can make. And this is why a lot of people who trade the markets lose money, because they don't understand this. The market's already been going up for quite a bit of time through here. Like, look at this big move. Like, over the course of 2 months, it's gone up 25%. Look at what this chart does. Look at what markets do. Markets go through phases. It goes up, goes down, goes up, goes down. So therefore, after every up leg, we have a down leg. Up leg, down leg, up leg, down leg, up leg, up, dip, up, down. So therefore, when we go up leg, we have down leg and up leg. That's what markets do. So as the market's been going up for 2 months now, so the best opportunity, can I roll them to 1 year? Well, you can do whatever you want. I can't actually tell you what to do. I'm just letting you know what's happening. The better opportunity is wait for a pullback. Why? Because all markets will pull back. That's what markets do, right? So the better opportunity is go up and then wait for some sort of a pullback soon. And then get in on the pullback if you're bullish. And therefore get ready for the next leg. Yeah, buying up here after it's already made a big move here. Really bad. And this is not XLE. This is all markets. Getting in recently after it's already made the move. Big mistake. Big mistake. Especially if it's already, especially like right now, it's as is before, especially right now, it's 50. It's almost 2 months worth of upward movement. It's the worst thing to do. And if you do that, I promise you, at least 7 times out of 10, you're going to lose money. Especially buying an April option. The time to get into something is what? Down the bottom here before the move happens. And this is what a lot of traders do, right? And this is why a lot of people lose money. It's not the market's manipulated, no, because people wait for many months of big movement first, and then they start to pile in. That's why I know a lot of people lost a lot of money on silver. Why? When were they piling in? Up here, and then you get that. Just be smart, Adam, about the way you're doing your trading, man. Look at what charts do. Look at how they actually work. They go up, they get pullback. They go up, they get pullback. So if that's the case, if it's going up for a few months, we're probably going to get a pullback. And if that's the case, it's probably a bad idea to get involved with the markets. Just look at history. That'll tell you 100%. Don't look at that one time the stock just kept going up and up and up and up, because if that happens, that's called GameStop. And even when that happens on GameStop, now when that happens, that's called bubble. And when that happens, it ends up coming back down really quickly. And you get this whole whoosh, whoosh. So something just keeps going up and up and up and up and up and up and up, which silver did, you end up getting the bubble burst. Just give me a second. What you want to be doing, guys, is just get yourself educated, guys. Again, I give away a free trading course, guys. It's free. I'll teach you how these markets work so you can make much better decisions. That's at johnsfreegift.com. Go get the book. Promise you, read the book, go through the trading course, and light bulbs will start to go off. And if you do need a bit more help around the actual trading side of things, and you want a bit more hand-holding coaching, then you may be good for my elite coaching group. It's only 20 people in there right now. I'll try to keep it really small. If you go to getjohnshelp.com, that's get, JOHNS, help.com, there's an application form, a bit more about the actual program itself, testimonials, people that have done my coaching, and all that down home country goodness. But at least just get the free book and the free course. Just go through the book, go through the video course, about 8 videos long. I promise you, just go through all that once. Light bulb, light bulb, light bulb, light bulb, light bulb. Oh. And then you start to see some stuff like, oh, I'm starting to understand this thing called markets. Luna. Oh, that's a crypto, right? 50? Is that crypto? Buy, sell. Man, I've been almost 3 hours today. 3-hour live stream for you guys. Right? How about that for a Saturday afternoon for you guys in America? Sunday morning for me here in Australia. I just love it. I can keep talking about this stuff all day. LUNR. Oh, it's a stock. Stocky. Let's have a look. Oh, geez. Thrifty. There's good support at 0. On an actual note, but on an actual serious note, let's look at this weekly. I'll go to this daily chart here, actually. I zoom in on this daily chart. What we are seeing here on a serious note, we are seeing this resistance level here, and we're seeing what's happening here. So if we do hold, let's actually zoom back in a bit more. Let's make this here. Yep. No, I understand. So on a level of breaking out and start to see a move, right now, we actually, look what happened. Right now, we rallied up. We came back down to 50%. We're holding 50% now. Now, this is where the if scenarios come involved with this level here. All right, look at this here. Check this out. So we're here right now. And then we go to clone. It's probably through there somewhere, right? Yeah, something like that. Okay, so this has been holding here for this here, and we're starting to see this big leg up. We're coming back down. We're holding through here now. Okay, cool. So what that simply means is that if we do hold here, continue to hold here right now, and what that looks like here, and I'll do a bit of a paintbrush thing, up, down, hold, and then if we start to break up through here, that's going to give you confirmation the buyers are taking control. And then there's a good chance we're actually going to see this thing start to rise up for a little bit. And that's about $10 there. Yeah. So that's what's going on right now with this one particular. So that's what I'll be watching for. Right now, it's actually coming down. Very positive sign. It's actually holding that 50% level. Once again, very positive sign. Boom, boom, boom. But again, let's just bring it back to here. Let's bring it back to the very short-term analysis. There we go, from there to there. That low to that high. We're holding the 50%. When it holds the 50% and then continues up, there's actually, it starts to develop this what's called strong trending environments. So that's what's happening there. And if we do break out, then an average target, a target for this here could be around about, just doing some measurements, there's a bit of a what's called channel projected target. You find a bit of a channel in place. There's a bit of a channel there. You measure from the high to low. This is the channel. And then you do the projected target where you project it up. And therefore, a target for this here could be around about that level there, which is about a 70% rise from that level there. So that could be a target of where it may get to if we develop that pattern, what I just said there. Let there be light. Let there be light. Look at that NASDAQ, eh? Beautiful. There's something big coming. There's a big move coming in these markets. This volatility for the last 5 months now. It's about 5 months, isn't it? Yeah, 4.5, 5 months. There's some big moves coming. Big moves coming. What is that through there? Russell looks beautiful for another breakout soon. King Russell. We've got a bit of shorter term trend line as well too, don't we? Something like that coming through there. It's probably through there now. It's probably holding that through there. Let me take some trend lines off the screen. We don't need too many. We're probably going to do that again soon. Because it's just holding here, isn't it? Russell's the strongest on the whole lot. Just nice, good trending, higher lows, higher highs. Beautiful trend. Dow Jones short term, just a very nice, strong trend. Yeah, it looks good, doesn't it? Okay. There we go. Let's go to the Dow Jones. Dow Jones has been very strong, hasn't it? Hey, look at see, just continue this big volatile. It hasn't been strong, but we've definitely been in this nice, good trending environment through here. Still compressing up like that level through there. Yeah, maybe, maybe. I think the end result, Thrifty, no matter what that is, I just see a lot more higher prices. So anyone that's trying to capture a big crash right now, it's just not here. That's why markets keep going up higher. Yeah, we may get a correction, but if we do, I'm actually hoping for that, by the way. If we do get that, oh my goodness, it's a gift. It's going to be a gift. Not to some people. John, this time's different. Oh, the most dangerous words anyone can say in the markets. This time is different. No, because it's all the same thing. There's nothing new in the markets. It's the same patterns, same cycles, same. There's nothing new. Might be different to you because you're experiencing now, but in the past, it's happened many times. We just got to figure out what that many times has been, and then we can take advantage of it all. It's really weird. Gold's actually still holding strong. We might be getting ready for another leg up in gold soon. Because look at this here. Look at this last 6 months. All the correction did is just come back down to this low level here. So this last couple of months, that's all it basically did. Let me delete you because we don't need you anymore. So that's all gold did, didn't it? Hey, we just had to come back down to balance it out a little bit more. We went too far up, come back down to the support level, and now we're bouncing. So gold could be getting ready for another move up again. We're holding here quite strongly and nicely. Quite strongly and nicely. So gold's actually looking pretty good. We're still on a strong upward trend right now on gold. Short term this is like so the daily charts, even on the weekly charts, we're still uptrending. So we haven't topped out yet. But silver's a bit different. Silver's actually, yeah, we haven't gotten down to, there's this major level coming through here. So silver could be having a bit more of a downside because silver actually had more of a bubble than gold. The reason why silver had a lot more of a correction than gold because silver bubbled more than gold. So what bubbles the most crashes the most. And yes, it was a bubble. That's why it came down so hard. That's called a crash. A complete massive crash in one day, that's called a crash because it just bubbled up so much. Where gold had a drop, but it didn't actually, what was that? 3 days, 16%, where silver did that in one day. So I think that probably gold has a bit more upside to go. Looks like it's developing quite strong. Again, if we get above this 5,100 level there, then gold could see another move up to new highs and possibly even a race towards that 6,000 level then. It's looking quite strong. Whereas silver, though, once again, we're not there yet. I think we have a bit more downside to come, just to come back down here. But everything's looking quite strong, like even some of the mining stocks, short-term stuff, short-term analysis, still holding quite strong here. Yeah, it's been doing nothing, hasn't it, eh? It's Boeing been doing absolutely nothing. Yeah, there's a bit of issues up there though. But if we can clear that, but actually doesn't look too bad. Actually, doesn't look too bad. We're still in this very sideways pattern here. We haven't really done much here, so it's not a strong trending stock right now. It hasn't been since for the last 5 years. It's been horrible. But if we do start to break out, could be quite a nice move. platinum. Look at sector utilities. Look at XLU starting to really move, eh? Really starting to move that XLU. Home builders. XHB. Man, there's a lot of bullshit in there. Look at the buyers coming in. Beautiful trend here. Look at this here, up, down, high lows, high lows. Beautiful. We're starting to develop this trending here. Transports, breakout, nice quiet movement. I'm expecting more upside to go out of the transports, even though we had this down day here. Why? Because the trend's up, so the trend continues most of the time. Sector materials are actually looking quite nice. Look at this here. So XLB, the sector materials, after all this time doing nothing, and now we're starting to break out. Oh my goodness. It's interesting, you know, for so many years, a lot of these sectors have been doing nothing and now they're all breaking out. They're all starting new trends. Obviously, XLE is the one I've been talking about for last year. The time to get into it was last year, not when it's already made a move. Adam, if you're still around, probably not. XLV is actually a market that I'm watching for right now. Of course, we could be getting a big move coming soon out of this XLV. There's so much opportunity right now, guys. So a good breakout could be coming soon on XLE. Let's go to uranium. XLP. Yeah, look at this here, guys. Interesting, eh? Interesting. Look at this here. If you look underneath the surface of all these markets, of all the actual sectors, they're actually quite bullish. Market crash. Look at the actual sectors are really bullish. A lot of these sectors are breaking out. Consumer staples, home builders. Crash. We're just getting started, aren't we? What a beautiful breakout. It's a beautiful day. So many sectors are bullish. That's so that underneath the actual stock market, the indices itself, there's so much bullishness. And bullishness means that we're actually just starting new bullishness moves underneath the surface. So it's a broad movement in the market. It's not Mag 7 dragging it up, it's a broad movement. Meaning that a lot of these sectors are really starting to break out now after haven't been doing much for many years. And now we're starting to see these things catch up. So underneath the actual indices, as you're seeing through here, there's a lot of these sectors are starting to really gain a lot of strength. They're definitely not selling off. So we're not seeing, we have the indices and we're not looking at the actual sectors and seeing the sectors completely sell off. We're actually getting a lot of these sectors breaking out after not doing much for many years. Thrifty, that sounds like an oxymoron, man. Everything's well balanced, but it's still going to shit. Or XLF as well. So the financial sector. I'm actually. My goodness, there's so much bullishness in the markets. Consumer directional ETF. The Brazilian index. Go to the Brazilian index. Here we go. Brazil to the moon, to the moon. Go Brazil. Yep, sure looks like a top's forming. Uh-oh. No. We have many more years to go. Trump 100K. Here we go. It's probably going to happen as well, too. Probably from a lot of things, right? If the dollar is devalued, that's going to push asset prices higher. If they default on their debt, it's going to push asset prices higher. If they print money, it's going to push asset prices higher. It's so much. You talk about fundamental news. Fundamental news. Let's start up, open this thing up, eh? Talk about fundamental news. There's so much like that's the fundamental news, right? All that is bullishness for the actual dollar, the Dow itself. But John, if you measure it in gold, we're not using gold. We're using dollars, aren't we? We actually take dollars and we buy stuff. We invest, we trade, we pull that out into dollars, and then we use the dollar to go buy stuff. But if you measure in gold, John, we're not using gold to buy stuff, are we? So keep it in dollar. We invest with the dollar. It goes up in the dollar. We sell for the dollar, and then we use that dollar to pay bills. Most of it goes to the government, a little bit goes to you, and that's okay. Ocean, the best stuff on YouTube. Thank you, sir. Oh, Ocean, my man. Hello. Welcome. Good to see you. Thank you so much for that nice, positive comment there. I really appreciate it. Just doing my thing, just doing the best I can to help people. Again, I've been trading the markets now for over 20 years. And through the 2 decades of my actual trading experience myself, I've learned some things that have really helped me with my own personal trading, which allowed me to have some good, successful years. And I say years because it's not just successful months. It's how do I have successful years and after year, right? How am I going to have a successful year this year? It's just understand that. And then that's what my job is, to teach some things that have really helped me and still are helping me right now. I see that sometimes after an exciting consolidation, you wait for the retest and sometimes not. By the way, XLE may not retest. Do I look for the retest? What I do, Ocean, is if I'm looking for a trading setup, there's differences from actually just trading something because I think there's going to be a nice move like in XLE, or there's differences from looking at my actual trading setup. My trading setups is not a retest. I'm not looking for a retest. I'm looking for my trading setup. There's a big difference there. So I'm looking for basically my pattern, sideways, stuff like that. So yeah, that's the difference. If I'm looking for the trading setup that I trade, then that's what's about there. But XLE, this is the XLE monthly chart. Don't be too surprised over the next couple of years we start to make our way up to here somewhere. We start to see it up here. And you're like, wow, the energy sector, XLE. Which actually makes sense, right? If you want to talk about fundamental, why is this starting to happen now? Because where are we going to be in a few years' time frame? Even more energy demand. Talk about fundamental news coming right behind it, right? AI and robotics and the energy that we need, right? So XLE, the energy ETF of all that, is probably breaking out now ahead of what's going to happen in the next few years. And then the next few years, guess what? Energy is going to be going crazy. Oh my goodness, blah, 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 blah. And then everyone's going to be jumping on board. Oh, yes, you should be part of XLE. That's the market. This time's different. And that's what I'm getting out. But I think there's huge movements coming out of this market, this energy sector. Again, this is the monthly chart here. If you go down to the weekly chart, this is the weekly chart here now. Short term, that $60 level. But from an investment, I think there's really good investments happening in the energy sector. Really good investments. It's not metals and miners. It's not even AI stocks. It's the energy sector is where I believe there's going to be absolute fortunes made in the next few years from an investment point of view. Again, technically was what I'm seeing in the markets, but then if you want to add a fundamental, exactly what I was saying before, we know the energy demands are going to be huge over the next 5 or 10 years because of AI and cryptocurrency generation and you name it, right? So the energy demand. So therefore, energy demand push price higher. Oh, get in now. No. Don't just trade based off a YouTuber, which most of you guys do anyway. But Trade because you understand why you're doing something. And by the way, I'm surprised and shocked to see how strong it's been straight away. I didn't expect it to come out of the gate so hard. And even stocks like one stock something I was focusing on, which was XOM, which hit my target. I didn't expect to come out so hard. But it did. But to me, these are first legs up in a big bull market. Meaning I believe we're likely to continue seeing this thing unfold. So for example, this is the market that I see. This is XOM as example, and even XLE. I see ultimately, yes, we're going through a bit of a pullback here, but I see ultimately we're likely to head up to probably the 260 level on XOM. XLE, this thing could start to really, we're just breaking out now. So even though we might get a bit of a pullback now because we already had a big move, we're due for some sort of pullback. And then that may last a couple of weeks to a couple of months. And then I think we have a lot more upside to go. So there's just such big movement coming here. And so from an actual projection point of view, let's do this here because that's what I did for XOM. I used the so these here 75. And then ultimately, probably around that 100 level is where I see things ultimately going. But with what I just said there, it's not just going to keep going straight. Right, we're looking at a monthly chart here, so just be smart about that. We're probably going to go up for a bit and then come back and go up, and we're going to slowly step up. It's not just going to go straight up to that level there. So therefore, if that does happen, and we're seeing this here, I'm going back to the weekly chart now, and we do make a rise towards that 100 level. Again, I'm expecting a bit of a pullback here soon. But from the breakout to that, easy. Yeah, that's about 100% move from there to there on the XLE market. Is that right? Yeah, about 100% move. Now XOM, same type of thing. And yeah, probably same thing, right? So we probably have a nice little 100% move coming on these markets that I see anyway. See, Thrifty, I just saw your comment there. My goodness, the health sector. So the health ETF stocks in that their CVS, which is Health Corporation. That sector could be a big sector coming soon. Chevron already made its first move.